Let's bring in a market master of the morning. Krishna Sanghvi, CIO Equities at Mahindra Manulife Investments, is with us. Krishna, great to have you on. Thanks for joining in. So many headlines, so many moving parts, geopolitics, tariffs and whatnot to digest. And then, of course, earnings. Not easy to make money in this market anymore, right? So what's your recipe or what's your, what's your formulation for making money for the rest of the year? Because it's down to very, very specific stocks now.
Yeah, I agree. It's stock specific, but I think the broad recipe is simple. Can we avoid the noise and look at next 18 months, 24 months, which is typically the investment time frame we look for companies, and to that extent, once you go ahead, some of this noise possibly will come down. Economy keeps on its own track, which is a reasonable growth rate in the current atmosphere. 6.5, honestly, is not something we should be worried about. It's a nice growth in the overall context of the world. So that's a real recipe. Keep your time frame right, which is essentially maybe 18 months, maybe 24 months from now, when some of this noise will go away, earnings will keep on coming. Noise are maybe detracting the valuations right now. So hopefully the combination of earnings and multiples will support the investment hypothesis.
Looking inwards, and we've been seeing this K-shaped recovery for a while now, Krishna. So what are the subsectors within consumer discretionary or staples which look attractive to you over the next 12 to 24 months?
Yeah, this K-shape clearly has supported higher end consumption, within which something like travel and leisure can be one nice spot. Maybe upper end discretionary products, maybe durables, maybe automobiles. I think those are the typical beneficiary of high end consumption, and we do believe that stays good. At the same time, let's look at the other side of K-shape. We believe things have improved substantially over last 12 months into that segment of economy, and going ahead, even we expect something like staples also to do reasonably better vis-a-vis their own last 12, 18 months history on business performance front, because staples is a place where now the rural economy is picked up far better than what it was 1 year back. So something like that is going to help consumption pattern even in the other side of K-curve.
All right, just hold on to that thought. Now, just keep an eye on Divi's Laboratory. The stock is lower. Overnight we had Eli Lilly's experimental oral weight loss drug. Out there, the average loss was around 12.7%, which is a little lower than the 15%. Now, the street believed that if this drug did well, it would be a potential opportunity for Divi's in the time to come. So, may not be as big as what was estimated. So, I think that's why a bit of a sentimental knockback with regard to this stock, because of Eli Lilly's oral weight loss drug wasn't as successful as what earlier expected. So let's see how that goes. And the other one is Ramco Cements. The numbers were there a little bit disappointing, and the stock has already had a good run. Volume degrowth higher than expected. That's why that stock is under some pressure in today's trade. But let's get back to our chat with Krishna. Krishna, I wanted to ask you about the real estate space. We were just highlighting some IPOs. And in Lotus, I saw that y'all were one of the anchor investors. What is your view on real estate here in Mumbai? And if you want to talk about the rationale behind this one, it had a phenomenal listing.
Yeah, let's look at real estate. And if I go back to the previous question, that's clearly one more name on the discretionary consumption space, especially higher end. So real estate is one more discretionary space, and yeah, we do own quite a few stocks across, in terms of real estate there.
What else do you like, Krishna? Are you seeing value anywhere?
Value in the current market, honestly, is slightly challenging. It's not that it's not there. It's just that there are certain pockets which are value, unfortunately, not able to spot a catalyst for a quick realization or monetizing that value. That's where the idea is, again, to keep slightly more longer term focus. That 18-month, honestly, to my mind, is right time frame. Let's face it, markets are pretty much at same level for last maybe 12 months or this roughly 25,000 Nifty is what we were a year back. Today we are. So in a way, value is emerging partly from time correction. At the same time, we need little bit more earning support, and that's where value, I think, is little bit one has to wait for that value to be monetized rather than upfront. Other side of the market, clearly slightly more momentum, which is also it's one more way the market plays out right now.
Okay, I just wanted to clear that point. In real estate, you're positive, right? I mean, when I asked you about Lotus and the money you'll put there, real estate is one of the sectors you're positive on?
Yeah. As I said, real estate is one of those, discretionary, K-shaped beneficiary of India is earning more, Indians are spending more. It's maybe combination of lifestyle as well as, earning growth combination.
Okay, all right, Krishna. Appreciate you stopping by and giving us those, your take on the markets.